What's up, everyone? All right, so I'm going to give you guys a game plan for the week ahead and see if we can come up with a little bit of a watch list that we can work with for tomorrow morning. So get a little bit of a head start here. For those that weren't around last week and are just kind of sitting down and trying to get a gauge for, you know, what kind of market are we in? What's the strength of the market? What's happening? This episode should break it down for you. So first of all, we'll go through the continuation scans, look at some top gainers, some after hours movers from Friday. Let's start with a look at the overall market, the S&P 500. That I think helps set the stage for just the general condition of the market that we're in right now. Obviously, we are still in a bear market, as you know. We've been pretty much in a bearish downtrend since like January. But for the last 6 weeks or so, we've been on a bear market rally. So it's something like a dead cat bounce, but bear market rallies can be pretty fierce, and we have had a really nice bounce here. Now, one of the things that a lot of economists and of course people that study the larger market trends and things like that, most people are skeptical that this bounce will last. They think that, you know, this is a sort of a strong bear market rally, but that we are not gonna, most people seem to think that we're more likely to retest the lows than to retest the highs this year. And the main issue there being that inflation is not going to reach the Fed's 2% goal. There's no way that's going to happen by the end of this year, regardless of how much they increase interest rates. But they are going to continue to increase interest rates, as they've indicated. They will slow down at some point, as they've also indicated, but they need to start seeing inflation come back down. And so at this point, it seems pretty clear that the 8% inflation is going to be around for, you know, it may take a couple of years to get back down towards the 2% target. I mean, we're way, way above that right now. So in order to get us back down there, we've got quantitative tightening, we've got increasing the interest rates, and that is going to weigh on the market. I imagine that we're going to see, and we may even have a recession, and it would be one that's kind of manufactured in a way by the Fed increasing interest rates. But then I suppose the question on their side is, what is worse? Sustained 8%, 10% or higher inflation, or slowing down inflation, slowing down demand in the economy, and thus creating a recession. The fact that we've still seen very good jobs numbers, you know, people are still being hired. That means they're going to have disposable income, and they're going to be able to keep spending, which is not going to slow down a lot of demand. But, you know, so this is something that is happening in the larger market. It's something to be aware of. To the extent that it really affects us, I generally find that I trade better when the market is bullish. And so in the last 6 weeks, for instance, I've been trading quite well. I have my metrics here for the month of August, which I've got so far $130,000 in total gain for the month of August with 69% accuracy. And that means this is a great time for me to remind you that trading is risky. My results are not typical, and this is not by any means meant to make you think that you'll achieve a similar result. But I do think it's important that you know the person you're learning from is qualified. And I am. This is all real money. So if we look at the calendar here, my month of August is looking pretty clean. This has been a pretty nice month. We still have 8 trading days left, and hopefully I can finish strong. So, you know, this is the last 3 weeks. And of course, the market, you know, in the last 3 weeks has been pretty strong. Despite being lower, of course, than all-time highs, it's been on a nice rally. So I do seem to trade better during these rallies than I trade when we're in sort of a leg down, so to speak. And we have to be cautious because we may be coming into a leg down here. We tapped this descending resistance line on the S&P. Now we've got a red candle Friday, the 200 moving average right around this area. It is kind of flattening out. So if we can hold the 200 and we break over this descending resistance, then we're going to sort of buck the trend of what maybe economists are thinking is going to happen. But you know, That's not impossible by any means. So let's talk about, so that's sort of macro, big picture. Let's talk about the last week. So this month of August, the momentum for us really started with PGY. As you probably recall, this was at the end of July, a recent IPO that started to squeeze up, put in this, really impressive move from about $2 to $34 a share, $35 a share. This was phenomenal. This got the momentum started, and then when we had the HKD IPO, that was just explosive, absolutely crazy wild, from a low of $12 to a high of $2,555. And actually on Friday, I went on my phone to check the price of GCT, because I wasn't trading it, but I was like, I wonder where GCT is at. And so I've got my phone here, and I pull it up, and it says the first thing I see is $2,330, and I was like, you have got to be kidding me! This thing went to $2,330. Well, Google was confused and was pulling up some, I don't even know, so it's a totally different symbol. I typed in GCT, but it pulled in something totally different. So anyways, fortunately, I didn't miss a 2,000 point squeeze, but in any case, this was some crazy momentum early August. Then that fed right into Meg L, another Chinese IPO. But this one really, although it was, did squeeze up to 250 or so, it didn't hold, and it came down hard. We had a nice trade on the bounce down here, but this was a big sell-off. So then we had a couple of other IPOs like CHG, that was pretty nasty. We had Reborn Coffee, this one was pretty nasty. So, yesterday when I knew that, so on Thursday when I knew that GCT was IPOing, I was sort of like, I don't know. I mean, yes, it's Chinese, but I just don't know. And on day one, it really didn't do much. But then on day two, it opened up quite a bit. I did a whole episode talking about GCT in quite a bit of detail. So I'll put a link to that at the end of this episode. If you want to check that out, you can look at the trades and sort of how I traded it and everything else. So GCT is interesting. So going into tomorrow, just to sort of skip over all the trades and just sort of, is it worth putting on the watch list? And I'd say the answer is yes, it is worth having on the watch list for tomorrow. It hit a high of about $60 a share. It had a bit of resistance there. It is obviously higher priced. That means you're gonna have bigger spreads, bigger whips. Breakouts could be pretty tricky. So that's something to be aware of. Probably there's some action on it around 4 a.m. It seems, based on the close, like it's probably going to open a little lower. Maybe it tests this sort of, Friday's VWAP 42. Maybe it flushes lower, and then maybe you get kind of red to green 4 a.m., 4:30 kind of spike up to 55, maybe even double top at 60. And that's very possible by the time most East Coast traders are sitting down between 7 and 8, that it's already either pulled back way too much or has shown such a false breakout, we're not going to trust it. But, we'll see what happens. Some of the levels from Friday, we may have some ascending support in here. So if we hold over that level pre-market tomorrow, then we could be watching it as it comes up for a breakthrough 60 and a move higher. But I'm just a little skeptical. I'm not sure that we're going to get the clean moves on it. Even Friday wasn't really all that clean. I mean, it moved, but it wasn't really that clean, especially for breakouts. So anyways, GCT is definitely on watch. It's a recent IPO. The float is pretty low, so I think it's worth keeping an eye on. Okay, so that's GCT. I'm going to pull up this continuation scanner here. So Meg L on the continuation scan obviously has made a really big move over the last 2 weeks. The idea here would be a second kind of dead cat bounce setup. I think we already got the bounce. If it got over 22, maybe, but right now I'm not interested in that one. HKD, another one just to mention quickly. I just don't think there's going to be enough volume and the spreads will be tight enough to take the risk on it, but you could end up seeing a curl. drug on the continuation scan. So unfortunately, while it has a big range, it's on the bottom side of the range. So I really don't like it right now. Let's see. We've got Bed Bath & Beyond. This one, I was gonna say BlackBerry, but Bed Bath & Beyond, that pulled back too much. Not interested in it right now. A lot of traders still talking about high levels of short interest. And, you know, the fact is, Ryan Cohen sold his shares and it kept going up. It started going down when people found out that he was going to sell his shares. He'd already sold them. So it didn't go down in a sense because he was selling. Like it wasn't because of his orders going through. As he was selling, it was still going higher. It was the sort of mental aspect of he's out. Uh-oh, what does that mean? And then, you know, traders bailed. And so panic selling from retail traders and maybe some institutional traders going short is really what brought it down. It could certainly come back up if retail traders go back into it, but I don't know that they will. We could refer to GameStop and some of the price action on it. You know, initially, as you might recall on GameStop, there was, you know, some volatility here. Let's see. And of course, we've got the reverse split, which makes the charts a little harder to read. But you can see kind of in these areas, but really nothing to the extent of, I mean, there was this candle and then it kept going, but Bed Bath & Beyond, the chart is worse, unfortunately. So, you know, that's from panic selling. All right, so that one's off the list. TGL, at least for day trades. TGL, this still has potential. I would want to see it over probably $8.96, $9, and then a retest of the high. It would be best if that was associated with some type of breaking news. That would be ideal. HLBZ is too cheap, not interested in that. INKT, little on the cheap side, under the 200. BCAB to under the 200 year ILAG. Yeah, so a couple of maybes. ILAG back over 728 is the spot that's interesting. We're just too far away from that level right now. Top, another one that moved quite a bit. Pulled back too. BWV pulled back as well. So these are some of our biggest movers in the last couple weeks, but most of them aren't really positioned super well for continuation. DNAA, big move on Friday. This was an after hours gainer, so ended up being up 300%, 338%. So you could see that this was a special acquisition company, a SPAC, and they announced their merger, the company that they're merging into, and so we got this really big move. Unfortunately, since it's already up so much, I feel like I probably will have to just say I missed the move. And I'm really just not sure if we're going to be able to get any more out of that if you miss this. But we'll see it tomorrow. Probably pre-market, you get a little pop early, and then by the time we're sitting down, it's probably not going to be an easy stock to trade. And it's unlikely it would be at the top of the gap scanner because it's not going to be gapping up. If it's gapping up 100%, it's going to be at $80. Well, I guess actually, sorry, the after hours close was 14, so that's not true. So actually, it will likely be at the top of the gap scanner as long as it opens anywhere up here. But we'll be comparing that relative to the after hours highs from Friday. So we'll see. That's a maybe. It's good though that's on the scanner because it will make it more obvious. So that might actually help DNAA. So that one's on watch. GCT's on watch. Let's see. Those two are definitely worth keeping an eye on for tomorrow. And those are probably the two that look the best for continuation. And then I think the next thing that we'll want to watch is to see, of course, tomorrow morning, what our actual gap scan looks like. And hopefully we have some fresh news. So if we have some fresh news tomorrow, then that could give us some great opportunities as well. By the way, those tuning in, the software I'm using here, this is Daytrade Dash Scans. This is the software that all Warrior members use. So as part of your Warrior Pro membership, you have access to this Daytrade dashboard. So you've got the scanners, you've got the chat room. If you're interested in just the scanners and you want a chat room that gives you my audio video broadcast but doesn't have the mentoring and everything else, no classes, you could sign up directly for that with a 30% off coupon at Daytrade Dash. Okay, so if you're interested, Warrior members, as you probably know, you could check out the Warrior Starter or the Warrior Pro classes. Warrior Starter has partial access on the scanners. Not all of them are available. Pro is full access. Both have access to my audio video broadcast. And then, of course, the Pro curriculum has access to all the classes, which you can check out here. We have our Dog Days of Summer sale going on right now. So if you haven't checked that out already, you can check it out. All right. So, yeah, I think tomorrow I'm going to have GCT, DNAA, and then, a couple of possibilities. TLG, Top. There's stocks I'll keep an eye on, but probably unless they have some breaking news, they're not going to give us a good setup and we're not going to have a good trade on it. So I think I'll probably leave that alone. We may also have... Oh yeah, I see that. On the S&P 500, it's also possible that we're gapping down tomorrow morning. So, we'll see. We'll see how things look in the morning on the overall market, because that'll have, some effect. Again, it's this rising tide that kind of lifts all ships when it's going up, and then it's a headwind when it's coming back down. It feels like we're positioned at least for a good retest to the 200 moving average at 418. If it holds that level this week, then okay, we're holding it. If we just blow right through it and we're back at 410, then that may hold back momentum a little bit. So I'm not holding any long positions in my day trading account. Obviously, I'm cash at the end of each day. I don't hold anything overnight. So that account is all cash going into tomorrow morning. I'm ready to trade. I've got about $600,000 in that account, in the retirement account. So I can trade, pretty aggressively. I could buy 100,000 shares of a $6 stock, I guess. I could buy 10,000 shares of a $60 stock. So I can trade fairly aggressively if I see good opportunities, but I really haven't been trading that aggressively. Biggest positions last week, I think I had 20,000 shares on VLCN VLCN on Friday, and that was at $3 a share. So it's a $60,000 position. That was probably the biggest position I had last week. So not really trading with really, really big dollar size, mostly because I haven't been quite confident enough. And although I've had a couple of nice green days this month, I'm just kind of at the point where I'm trying to coast, maintain accuracy, get in, get green, lock it up. So I'm definitely focusing on, taking a couple scalp trades, couple breaks of half dollars, whole dollars, trying to get green each day. Once I'm green, trying to build the cushion. I'm not buying lottery ticket trades. While I have an account that has enough in it that I could, throw $50,000 on BBBY and hold it for 3 weeks, that's just not my mentality when it comes to trading. I have a strategy, I have a plan, I follow it every single day. And a lot of the trades that people have been getting really excited about, unfortunately, fall outside that strategy. The meme stocks and things like that. I've probably left money on the table by not just buying and holding a bit, but it's just never been my strategy. But again, having said that, the changes in the market with meme stocks are worth being aware of, and Gamestop. And then, of course, all of the stocks in the last, year and a half that have gotten some social media interest, like Bed Bath & Beyond, there have definitely been opportunities there. So it's probably worth watching to see what the next one will be. But, this is the type of volatility that we're seeing. It's pretty extreme. So you just have to kind of be willing just to set it and forget it if you're taking that approach. All right, so I think we've got our game plan for tomorrow. GCT's on watch, DNAA's on watch. Both are higher priced. I'm hoping that we see some nice low price gappers hitting the scan. We'll be watching the overall market to see whether it's gapping up or down. Given the position of the S&P to the 200 moving average, we may come down a little bit. You could look at the IWM as well. It's the Russell 2000 small cap index. So obviously already testing the 200. You know, but I look at the S&P a little bit more closely. It's just easier, better picture of the overall market. So that's kind of what I'm going to be watching Monday morning. I want to try to keep the consistency going. I'm sitting right now at 130,000 on the month, and I've been at 69% accuracy. And the funny thing is they take the extra digits out here, but I'm almost positive it's 69.420. I don't see how it could be anything other than that. So I feel like that's maybe a good omen for meme stocks, and maybe we'll have something really exciting to help finish up the month of August. But I guess we'll have to see. Profit loss ratio has been good. $625 winners, $546 losers. So again, none of this is like, this isn't lottery ticket type of stuff. These are just, you know, small gains, small losers, but consistency is what creates that number right there. So I'm going to try to keep it going. And it was a little choppy for me on Friday. Friday was, in fact, my worst day of the month. I went pretty deep in the red here before rallying back and managing to land smoothly just above green. But it was not an easy day, and I could have easily finished the day in the red. So I am aware of that, and I want to try to be a little bit more cautious tomorrow morning and try to build my cushion a little bit bigger. But from the episode yesterday where I talked about Chinese IPOs, I also got into some detail kind of looking at where I might have gone wrong on the trade that I took on Friday where I went into the red. Realistically, then the summary of it is that it was a good trade. It was worth taking a stab since I already had a cushion, but I took a little bit too much risk on it, which didn't allow me to average down when it started to pull back. I was in just a little too heavy, and I probably would have been better off waiting for confirmation, which would have been getting in at the breakout spot. But you know, I just was a little eager to jump in it, because I didn't want to miss the move. So I'm just gonna try to slow it down a little bit on Monday morning. I think, you know, if we sort of think about the ultimate goal, and if we look at, you know, even if we just look at, let's see, you know, the last 5 weeks of trading, we could do a compare winners and losers from the last 5 weeks. So whatever, we'll start with July 1st. Okay, so start date July 1st. So we're gonna compare all losers to all winners during the same period. And I think what you're going to see here is that the average losses and gains are pretty even. They're about 11 cents a share right now. You know, if we look at just August, it might be a little higher because August has been a pretty good month. Yeah, 14 and 15 cent profit to loss ratio, or in terms of cents per share. So average winners right now are 14 cents. You know, but I've had 340 trades that have been winners. Average losers are 15 cents. I've had 150 trades that have been losers. So, you know, at this point right now, 15 cents a day. That's the average in terms of average winners. So if I can try to look for a couple trades that I think have the potential to give me 15 cents a share, I think that's the approach. Obviously, I'd probably rather look at the potential to make 30, and then even if I only make half of that, it's still 15 cents. But 15 cents a day, you know, that could be the difference between success and failure in this market, which is kind of crazy. But that's you know, 15 cents a day. So my goal next week is just to try to maintain consistency. I'm not trying to hit any home runs. I'm not going to be buying lottery tickets or throwing Hail Mary passes. Just trying to be disciplined, First trade of the day, first couple trades are the most important. That's where I have the opportunity, if I'm having a good day, to build my cushion. Once I get a cushion, then I can start to work with that cushion to, like, you know, so for example, and I talked about this at the end of last week, basically my thought is that each day, the first goal is to try to get green. So that first trade where I'm 0 on the day, that first trade has a lot of weight, because if it's a green trade, then right away I'm starting to build a cushion, you know, financially in terms of profit, but also there's a bit of a just, you know, psychological benefit and boost of that consistency. It gives a little confidence. So first trade, if it can be green, even if it's only 20 cents a share, if I take 3,000 shares, I'll be up 600 bucks. Boom. Okay, there's a $600 winner. Trade number 2, I look for the next trade. I still try to take a good quality setup. Maybe on the next one, I take 4,000 shares. If I get another 15 cents, that's another 600 bucks. Now I'm up 1,200 on the day. Now I'm starting to build my cushion a little bit more. I see another setup that looks good. I jump in with 4, maybe 5,000 shares. Maybe it's a loss. I stop out for 5 cents loss, something like that. I'm down 250. So if 600 down to 450, I'm at, you know, 450 on the day. Next trade, 4,000 shares. We end up getting something that really opens up nicely. It goes up 20, 30 cents like immediately. I adjust my stop to break even and add another 4,000 shares. Now I've got an 8,000 share position with a stop at break even. It goes up 30 cents and I lock up 2,400 bucks on that trade. Now I've gone to up, you know, 2,800 or so on the day. Halfway to the daily goal of 5 grand. Starting to get in the groove. I see another couple trades, maybe a couple small stops, small losses, but if I get the 1 or 2 that start to open up, I can add to those winners. Take my starter and then double the position, maybe triple the position as it's going higher, and then with triple size, with a stop at break even, I basically end up with a 12,000 share position, and I'm risking, in a sense, nothing, because my stop is break even, right? That's the best case scenario. It ends up going 40 cents, and now I've got $5,000 of profit on that trade. So anyways, that's kind of the mentality as I'm starting the day, just trying to get green on the first couple trades. And then once I have a cushion, use that cushion as sort of my backstop to try to add to positions with stop at break even, knowing I've got a little cushion on the day. So that's going to be the approach tomorrow morning. Again, those tuning in, I hope that if you have any questions, you leave them. We do answer all the comments that I see on the YouTube channel, so I go through and hit those later in the day. So thank you guys for posting questions. Thank you guys for hitting the thumbs up. Tomorrow morning, I'll be streaming for Warrior members, probably around 8 a.m. I might start streaming a little earlier, but Monday morning, I don't think it's necessary to sit down at 6 or 7 a.m. I don't think it's necessary. So beginning of the new week, the time to be most aggressive is between 8:30 and about 10 a.m. So that'll be the focus tomorrow. I'll be streaming on YouTube for the morning show starting around 9 a.m. And hopefully we have a good gap scanner and or continuation from one of these two that are on watch. Hopefully the overall market is gapping up as well, and we can have a good start to the week. But that's being a little optimistic because the market looks like it's positioned to gap down, and the two continuation stocks are both higher priced. That makes it a little riskier. So it's totally okay if it's a slow start to the week. Just again, focusing on those first couple trades, getting green and getting out. And, on that note, if I end up not seeing anything that I feel really confident that I'm going to get potentially 30 cents of profit, then I might not take any trades. And if all of a sudden it's 9 a.m. and I haven't taken a trade, 9:15, 9:30, 9:45, well, I'm probably not going to break the ice with my first trade at 10 a.m. because my best days start strong and they start early, pre-market, with stocks that are on the gap scanner and are moving higher. So I have to keep that presence of mind of, is this day looking like the type of day that's going to be a good day, or is it looking like the type of day that, I could end up getting wrecked? So have to be very cautious. All right, so that's the game plan. Thank you guys for tuning in, and I'll put a link to the 2 episodes here that I mentioned earlier, the one yesterday that I recorded on the Chinese IPOs, GCT specifically, and I'll put a link to the bear market strategy episode that I posted right here. Thank you guys for checking those out. And if you want to check out the sales that we've got going on Day Trade Dash, you could check those out, or you could check out over at Warrior Trading. So 30% off monthly, quarterly, annual subscriptions on Day Trade Dash, and 40% off your annual subscription at Warrior Trading. Okay, thanks for tuning in, and we'll be back at it first thing tomorrow morning.